Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. Kind of making a habit of these, but this is an important one because we got some data released today by the BEA, that's the Bureau of Economic Analysis, regarding the US GDP growth and inflation. And the reaction that we saw in the markets is something that should cause us to take heed. And so I just have a warning out there for stackers that we could see a bit of a pullback, could it even be a sharp pullback in the price of silver and also in the price of gold. Now, what am I talking about? Well, we'll dig into this economic data here in just a moment, what this report told us about the economy and inflation, and then why we need to be paying attention to the reaction of the markets, both in the precious metals and also the US dollar index, its reaction. If you're watching, do me a favor, hit that like button. Let's get a few more people in here, and then we'll start digging into this report from the BEA. Thank you, everybody who's saying hello in the chat there. Welcome. Welcome to another Smart Silver Stacker live stream. Okay, so I don't want to keep you guys waiting too long. Let's just get into this report and what it told us. So the Bureau of Economic Analysis, they released this report regarding Q1 GDP growth. Derek says that will be great news for me. Yeah, if we get a pullback in the price of precious metals, that'll be really a good thing for stackers, and we'll talk about that in just a moment. Now, according to this report, the U.S. economy not doing so great. In Q4 of 2022, we saw a 2.6% increase in GDP, and this time around for Q1 2023, analysts were anticipating a growth rate of 1.9%. That was the median estimate. And what we got instead was a 1.1% growth. So a significant reduction in the pace of growth from Q4 of 2022 and also significantly lower than the median expectations of analysts. So, economic weakness. And there was also an inflation component of this. We got the core PC and the PC index data for Q1. Q1 core PCE came in at 4.9%. That's much hotter. Well, not much hotter, but hotter than the expectations of 4.7%. And in Q4, that number was 4.4%. So what does this mean? We're starting to see inflation tick up again. This is the most recent inflation data, and it's higher than expected, and it's higher than it was in Q4. Now tomorrow we're going to get some more inflation data from the Fed. I think they're going to release the seasonally adjusted data. They're going to make some changes to the data, so we'll see how that looks. But according to this report from the BEA, the economy not doing great and inflation is moving higher. Now let's talk about why the economy was not doing great. Why the GDP was growing at a rate slower than Q4 and slower than analysts expected. Well, there was a lot of decreased investment from businesses. So businesses not investing in inventory as much. And why are they doing that? Why are they slowing down the rate at which they're investing into their own businesses? Well, it's because they know that there's an economic slowdown that's here or right around the corner. I mean, I think we're already in the midst of a slowdown, but it's something that is likely going to get significantly worse in the near future. And so businesses aren't investing in that inventory because they know there won't be buyers for it. Now, that decrease in investment was offset somewhat in these GDP numbers by increased consumer spending. So think about that. Consumer spending is up. But why is that? Is that a great sign for the economy? No, because the consumers are not spending more because they're affluent and they're able to go out and buy all these luxury goods. They're spending more on necessities because inflation is so high. So, of course, they're spending more money, but it's to get the same amount of stuff. So, increased consumer spending is not exactly good news here, especially when you consider where consumers are getting this money. Because it's not like they have all this cash that they're going out and spending into the economy. No, they're putting it on credit cards. We know that credit card debt in this country is at a record high and growing. And this is happening at a time when interest rates are also moving up. So for these consumers, the cost of servicing all of this debt is increasing at the same time that they are ringing up more credit card debt. And they're doing this just to pay for necessities, to pay groceries, to pay rent, to pay the light bill. It's not like they're going out and they're buying big screen TVs with these credit cards. But, that's not how the official government numbers want to present this. They want to make this look like a good thing. Also, Government spending made up about 0.8% of these GDP this GDP print. So total growth 1.1%, of that 0.8% government spending. Now how good is that for the economy? That's not the sign of a healthy economy, because government spending likely detracts from the real economy. I mean, are those dollars that the government's spending going towards some useful economic purpose? Maybe, maybe not. There's no way to know because there's no market in play there. I mean, this is just money that they confiscate via taxation, or that they print and everybody pays for via inflation, and then they spend it into the economy. But very likely those resources would be better allocated by the free market. So all of this is, ominous signs for the U.S. economy. But why would that mean a silver crash? I know I titled this video "Silver Crash Imminent, Silver Crash Warning." Well, one of the things that we saw on this news of higher inflation and weak economic growth is that we saw the U.S. dollar index in the green. We saw the U.S. dollar index rise, and we also saw gold and silver fall a bit. Now, they're not, I don't know what they are right now. I'm not looking at a chart, but last I looked, they were basically flat on the day. Gold was back under 2,000 bucks, silver right around 25 bucks. If you've got the current numbers, go ahead and put them in the chat. And while you're doing that, please do give this live stream a big thumbs up. Helps spread the word, helps get the message out there about this potential decline that we might see in the price of the precious metals. And we also saw the dollar index rising, like I said. So gold and silver down, and they're basically flat on the day, but they were in the green before this report hit. So they did drop on this news. And so we're kind of back to this bizarro world scenario where we see weak economic growth, high inflation, but then you see gold and silver fall, because that's kind of the opposite of what you would expect them to do, right? But it all has to do with expectations of what the Federal Reserve is going to do next. We're going to get an FOMC meeting next week from the Fed. Markets basically pricing in a 25 basis point rate hike for now. I think the CME Fed tool shows, Fed Now tool shows about a 80% chance of a 25 basis point rate hike. And I think that is what we will get, especially considering the fact that these inflation numbers now are moving back up again. Because remember, the PCE higher than Q4 of 2022 and also higher than expectations. So if inflation is beginning to tick up, almost guaranteed that the Fed is going to continue hiking, at least for now, because 4.9% on the PCE core, that is nowhere near the Fed's 2% target, the target that they claim they're trying to get inflation down to, and that they're not doing a very good job of, because they've been hiking and we're already seeing the inflation continue to rise. And a lot of that has to do with fiscal policy. We have a highly inflationary fiscal policy. We'll talk about that in just a moment. But another reason I think that we could see the price of precious metals fall and the US dollar index continue to rally is, one, the interest rates are going to continue to rise. I don't know for how long. Maybe this 25 basis point rate hike will be the last one. It's possible, especially if we see more trouble in the U.S. banking sector or something like that. I think that'll give the Fed pause to continue the rate hikes. And, eventually these rate hikes will break something. But in the short term, we could see the US dollar index rally significantly. And if that happens, that will mean likely a decline in the price of gold and silver. Now, I did a video a couple days ago about how the precious metals from a technical standpoint look like they may be pulling back a bit in the near future. And think about this. The US dollar index back in September of 2022 was at 114. Remember what the dollar index is. This is the strength of the US dollar relative to other currencies. Today, it's right around 101. That is a huge decline in such a short period. In about 8 months, seeing a decline of almost 14 points on the US dollar index, that is a very significant decline, especially for a currency like the US dollar. Now, this trend of volatility in the US dollar index started off when the Fed started their rate hikes last year. That's when we saw a huge spike up in the US dollar index to that $114 level. And remember what kind of an impact that had on the precious metals. We saw the price of both gold and silver falling quite a bit. And I mean, as a stacker, I kind of miss those days at this moment, because we were getting a pretty good deal on metal, it turns out. And I was stacking all through that decline. I know there were a lot of folks in the comments on the video saying, oh, it's going to go to 12, it's going to go to 14. And, that's not what happened. But I do think we could see a pullback, maybe not to those levels that we saw in October and September, silver around 17 bucks. I don't think we're going to see that, but I do think we could see, oh my God, the camera on the phone here. Sorry about that. Let me hold this up so it stops spazzing out like that. Anyway, I don't think that we're going to go back up to 114 on the US dollar index, but it's so oversold right now that we could see a significant move up, especially if we see higher inflation and more hawkish Federal Reserve stance on interest rates. If they continue to hike, or if they, come out and Jerome Powell flaps his gums a little bit about how aggressive the Fed is going to get, could see the US dollar index rally in the short term, and that would mean a pullback in the price of gold and silver. Now, in the long run, I would view that as a buying opportunity in the metals markets in both gold and silver. Anybody who's looking to get their hands on some precious metals, you can check out SD Bullion, channel sponsor. There's a link down in the description. But look, I don't really care where you get your gold or silver, but if the price pulls back, I'll probably be stacking more, and it might be a good time to do that because in the long run, the US dollar index, I think, will resume its decline. But you got to keep in mind that there's a lot of countries around the world that have US dollar denominated debt. That's courtesy of the IMF. And as these interest rates continue to go up, it's becoming a lot more expensive for these countries to service their debt. And so one of the things they have to do is they have to go into the market, the Forex market. They have to spend their local currencies to purchase US dollars. And that can create a lot of strength for the US dollar in the short term. That's part of why we saw the dollar rally so strongly in 2022. And again, I don't think we're going to get a repeat of that exactly, but the dollar has moved down very, very rapidly. And I think just from a technical standpoint, it's very likely that it might take a bit of a breather and we might see a bit of a counter trend rally here, a bit of a bear market rally in the dollar. And that would mean a pullback in the precious metals. And, this is a good thing to just kind of prepare yourself mentally for as a stacker, whether that mean getting yourself some dry powder to buy any potential dip, or whether it means just getting yourself mentally prepared so you don't become a weak hand and you see the spot price falling and you think, oh no, I got to go out and liquidate my gold and silver. And I don't think that there's too many stackers who have been around for a long time who think that sort of thing on a pullback in the metals. I mean, it's been a very bumpy ride since the 2011 gold and silver bull market. And so anybody who's been stacking since then, I don't think they're going to sell on a pullback. But there's a lot of folks who are new to stacking who got into stacking precious metals following the banking crisis here with the collapse of SBB and Signature Bank. And I think a lot of them, if they see a sharp pullback in gold, or especially in silver, because silver is such a volatile market, it can move very rapidly. And we've seen that on the way up, which is great, but you can also see it on the way down. And I think that in psychology, there's a principle that people's fear of loss is a much stronger motivator than their greed for gain. And so, those 7, 8, 9, 10% days up in silver are somehow not as psychologically impactful as when you see a 10% down day. That just seems to freak people out a little bit more. And I know there are a lot of new stackers who got into gold and silver following the collapse. And if there's any of you watching, hey, first of all, if you're a new stacker, let us know in the chat, put something in the chat for us. But, don't get freaked out if you see a pullback in the price of gold and silver, because the dynamic is exactly what I'm talking about. We've got interest rates rising, a potential rally in the US dollar index. But listen, in the long run, it's not going to be foreign countries that have to worry about servicing their US dollar denominated debt. In the long run, it's going to be the US federal government that has to worry about servicing the $31.7 trillion debt, because we're the biggest debtors of all. And ultimately, those debt service payments are going to dwarf everybody else's. So, we know how that debt is going to get paid. It's going to get paid via the printing press. Parallel Minds. Okay, Parallel Minds says, I'm new, silver has me frustrated, LOL. Yeah, this is exactly what I'm talking about. Well, look, listen, I don't provide financial advice on this channel. I have to throw that out there. I'm not a financial advisor or anything. I'm just a stacker. But for all of you new stackers out there, look, don't get frustrated by the price movements of the precious metals. And that could be a hard lesson to learn. what you want to do, or at least what I like to do, I'm not telling you what to do, but what I like to do is when there's a pullback, that's when you stack. You stack when the metals pull back because they have a habit of doing that. Listen, the precious metals markets are highly manipulated. We know that. And I'm not saying every time the price declines, it's because of a smackdown or manipulation, but sometimes it is. That's why JP Morgan had to pay $920 million in fines just a couple of years ago for spoofing the precious metals market. And it's why last year, two of their gold traders got indicted, and I think they got sent to prison by the Department of Justice for spoofing the precious metals markets for these financial crimes. So, and again, check that headline. I'm not sure if they got sent to prison, but they definitely got indicted for manipulating the precious metals market. We know that there's manipulation that goes on. This is nothing new, but that's why you got to get your hands on physical metal, not paper derivatives. Another thing, if you're a new stacker, listen, this is very important, and a lot of people don't understand this. If you understand this, you will understand metals markets better than 99% of people, and that is that the spot price of silver is not determined by a coin like the one you see in my hand here, like this silver Krugerrand. It's determined by the price of a precious metals futures contract. Okay. So, yeah, it kind of represents physical metal in the sense that if you want to take delivery of one of those COMEX contracts, you can. You can take delivery of like 5,000 ounces of silver at a go. But those paper contracts, a huge number of them get traded relative to the amount of actual physical metal that exists. And that's how the manipulation occurs because you've got the price of silver, quote unquote, the price of silver, the spot price, the price that everybody thinks means just, oh, that's the price of silver. That is set by a paper derivative of physical silver, a futures contract. And these large institutions, if you've got a lot of fiat currency, you can create these contracts ad infinitum and you can manipulate the market with just fiat currency, and then you take settlement of the contract in fiat currency, and no metals actually ever change hands. So, don't get too frustrated by the price of precious metals when it falls, and you think, well, how can silver be so cheap? How can silver be at $25 when its inflation adjusted all time high is something like $196. If you take the $50 high that silver hit back in 1980 and you adjust it for inflation, it's like $196. And that's just using the CPI. So it's probably actually higher than that. How can that be? Well, look, instead of getting frustrated by it, I think the correct approach is to say, I cannot believe that I can buy silver at 15% of its inflation adjusted all time high, or whatever the current spot price happens to be, because it is orders of magnitude lower than the inflation adjusted all time high. And that's just with the amount of inflation that we have right now. That doesn't account for all of the inflation rather, that is going to take place. So that inflation adjusted all time high of $196, and for gold, by the way, that inflation adjusted all time high I think is somewhere around $2,600 if you use the CPI. But those highs, I mean, they're going to get taken out, at least in dollar terms, in, by multiples, I think it's possible, because the dollar is going to be so devalued ultimately. And I wish that wasn't the case. I wish the dollar wasn't being printed into oblivion. But just look at the latest Treasury report that tells us that the deficit for the first 6 months of fiscal year 2023 is $1.1 trillion. I mean, think about that. $1.1 trillion in 6 months. It took 205 years, I think, to ring up the first $1 trillion in the U.S. national debt. And now in 6 months, we bring up 1.1 trillion. I mean, that is just shocking, right? It is shocking the amount of money that is being spent. And there's no way it's sustainable. And the levels of debt that are being created will be paid off with devalued fiat currency, Okay, Trombone Music MS says also the sales taxes are killing me right now. Okay, another very important thing for new stackers. I'm glad you said that, Trombone Music, because if you're paying sales tax on your metals, it depends on the state you live in, of course, but you probably should re-examine that because most states have some kind of exemption for purchasing precious metals. And it depends on the state you live in. In some states, if you buy like sorry about the focus on the camera here, guys, folks watching, there we go. If you're buying in a small quantity, sometimes you have to hit a certain number like you have to buy $1,000 or $250 or $500 or something like that, and then the sales tax drops off. And also sometimes if you're buying things like say U.S. Silver Eagle, now I know the premiums on those are exorbitant, so I'm not necessarily saying buy those, but if you're buying those or junk silver, which also I know has very high premiums at the moment, but there are certain types of gold and silver bullion that won't have sales tax attached to them. And it's state by state, so you got to do your research in your area. But try not to pay sales tax on your bullion because in most places, there are ways to purchase physical metal without paying sales tax. And we're seeing that more and more in a lot of friendly states. I think Missouri passed some legal tender laws that prevent the charging of sales tax on bullion products. And that's a trend we're seeing in Texas. They're working on a gold backed digital currency of some sort. So the states are kind of taking things into their own hands here, and a lot of them are becoming more friendly to precious metals as a result of what's going on with the dollar. A lot of these states are not as clueless as the federal government, and so they see what's going on. Trombone says, I live in Florida, so I have to pay $500 to be exempt from sales tax, but I have such a low monthly income that isn't practical. Um, well, yeah, sometimes you got to do it, I guess. I think that you might look into purchasing some, junk silver or silver eagles or something like that. See what the situation is there regarding paying sales tax on official U.S. silver coins. And I know the premiums are high on those ones I just stated, but you almost also might look at some of like the proof quarters. I don't have any here to show you. In fact, I don't even know if I have any in my stack, but I know there are some 90% like America the Beautiful quarters and stuff that get made now, and they are U.S. currency. So you might not have to pay sales tax on those. Again, I'm not a tax expert or anything. I'm not too familiar with the sales tax laws there in Florida, but check out the possibility of maybe getting one of those like America the Beautiful 90% coins or something like that. Chip Kagi says official U.S. silver coins no sales tax in, but then he didn't say where. But I think that in Florida that might be the case. So anyway, look into some ways to get around paying sales tax. Poker Moves. He says the real spot price is $40. Well, I think you can still get some silver cheaper than $40. Some places even physical, but yeah, remember spot price, not physical silver. It's just paper silver. So keep that in mind. And we could see a pullback here in that paper spot price in the very near future if we see the US dollar index rally. And I do think that there is a possibility that we might see that. But again, just a buying opportunity in my mind. But I'm glad I did this live stream because I'm seeing some pretty good comments there in the chat, saying you're frustrated with precious metals and, concerned about a potential dip. And I know that if we see a big dip, right now, there are going to be a lot of people out there, a lot of people who just got into physical metal because there's been this huge surge. Remember when we had the $500 minimum orders over at SD Bullion, and we saw junk silver drying up at the beginning of April, the end of March there. And also, there was that story about how searches for how to buy gold. I covered this in yesterday's video. Those had hit a record high or very near record high. I think in 2011 they were still a bit higher, but on Google Trends, searches for how to buy gold had hit a record high at the beginning of this month. And so that means a lot of people are getting into the market, and that's a good thing. The more people that have real physical metal, real assets in their hand, that's one more person who's not going to be destitute should the dollar hyperinflate, and that's a good thing. Having people who are economically prepared, that means one less person who needs government assistance or private assistance or whatever if we get a significant economic crisis. So getting prepared, you're doing a service not only for yourselves, but also to others because, let's say there's hyperinflation or something like that and people's money's getting wiped out. Most people can't afford anything but maybe the most basic foodstuffs. Well, if they're getting some kind of bailouts or assistance and you don't need it, I mean, from a, kind of a groupthink perspective, it's always good to be prepared. And for your personal situation, absolutely good thing. But that's pretty much all I had for you today, everybody. Thanks for watching. I really do like doing these live streams. If you enjoy them, please do give the video a thumbs up. Let me know in the comments any topics you'd like me to cover in the future. Somebody says, why the Lions? SD Bullion had a sale on them. I think I got these last Black Friday. So I like Scottsdale Mint stuff. Usually it has a bit of a premium on it. But when they go on sale, I like to stack their stuff. Trombone says, what price range is recommended for stacking silver? I guess I can stay on and answer a few questions. If anybody has any questions, put them in the comments. what price range is recommended for stacking? I wouldn't say there's a specific price range. Again, I don't give financial advice. You know, everybody's situation is different, but I like to just make small purchases and to buy when the price declines. So if we do get a dip in the near future, which I think is a possibility, might be a good time to do some stacking. You know, I like to buy when the metals are in the red, not in the green, and I think that's a good way to do it, and just make regular purchases. But anyway, thanks for watching, everybody. I'll catch you tomorrow. I'll catch you next time. Stay safe and happy stacking. Smart Silver Stacker.